Hello and welcome to my latest weekly video news from Madison's. Well, prices, the market, what's going to happen? It's all I seem to hear about at the moment, and certainly the question on any sellers and buyers' lips that we get asked about a lot. What am I experiencing therefore here at Madison's? Well, certainly stock is phenomenally low. I have never run at such low stock levels as I am at the moment. So a real focus to win new instructions, but the reality is many sellers now, I feel, are just waiting for this year to get past and to list in the new year. Some are stealing a march and wanting to get on with it sooner rather than later, but Rightmove shows that for properties that were listed in October, they were down by 0.6%, which is the lowest drop since January of this year of properties coming to market and what they're priced at. So certainly I think those sellers that are going to market are being very realistic about their pricing and looking to create a bit of a bargain to tempt some buyers with to get under offer before Christmas. But there's no doubt that it's becoming a more price sensitive market. We before, in the sort of previous hiatus of this year, were often negotiating. Our average was achieved about 104% of asking price, and now we sit at close to 98% of asking price. There's a degree to which prices are feeling more optimistic, certainly for what I'm seeing locally in what they are going to market. So personally, I'm seeing a slight contradiction to that Rightmove statistic, in that many sellers feel that they've heard about this fabulous hype in the market and want to chance their arm to try and get a good a price as possible, knowing there's such low stock. So of course, the one other thing that's massively on everyone's lips is what's going to happen to interest rates. Of course, interest rates are at a historically low rate at the moment, 0.1%. I was staggered that they weren't raised at the last Bank of England Monetary Policy Committee meeting, but they were held at that rate, but lots of advance warning that they will definitely be going up. Interest rates are quite simply the easiest way that the government has, or the Bank of England, sorry, to control inflation. Inflation at the moment currently sitting at just over 3%, so it is starting to look like it's a bit out of control. And inflation is running away simply because there's so much money in the economy at the moment. If you've got too much money chasing too few goods, that's what pushes prices up. People feel they can charge more for things. And with the furlough scheme and everyone working from home and not being able to spend for such a large portion of the year, there is a lot of surplus money. So that's why inflation is starting to ramp away. Always been the fear of all that monetary support that was injected into the economy as a result of the pandemic. And inflation, well, you simply can control it quite easily by raising interest rates. If you make money more expensive to borrow, if debt becomes more expensive, then people tend not to invest. That can include companies who invest in new plant equipment, maybe buying in new premises, but equally mortgage customers who simply find that their debt costs more each month than they had been expecting. So property becomes a great hedge against inflation. You do find that, so there's no doubt that if you're sitting on cash, you might decide to go into property at the moment. So excuse my dog, she clearly got really bored of my vlog. I'll have to work harder next time bringing some dog related elements. But yeah, property sits as a great inflation-proofed asset. If you've got money, you could probably invest in a property, and you'll find that property will keep pace with inflation far better than cash is. So certainly property a better place to sit than cash when you're looking at an inflation environment. If anybody wants to chat to me about that more, I try to keep it quite short and simple here. I'm very, very happy to. I have a background in economics, so really happy to talk about that in more detail if it's of interest. Well, an interesting little local variance is going on in prices as well. Guernsey, interestingly, caught my eye. Had a 19% price rise over the last 12 months, is now more expensive on average to buy there than London. Isn't that fascinating? And Rightmove have got an interesting blog on their website about the most popular hotspots to now live in. There's some quite interesting facts there. I think it shows the areas that have shown really strong capital growth actually. And Tunbridge Wells and the area I live in has always been quite expensive, so we're not on that. We've seen good growth, but certainly not as astronomical as some of those areas looked at. So do look at that in more detail. Well, of course, we're coming into Christmas. Thank you so much to so many of you who supported the big reveal last Saturday. Wasn't it a great event? I was a bit nervous about opening the event and also revealing my window, but do head on down to the Pantiles. You have until Thursday evening to cast 3 votes for your favourite Christmas window, and we will definitely be doing it again next year. We've already been talking about a few tweaks to it, but it was such a fabulous and popular and well-received event. Carol singers, by talents, Father Christmas, absolutely excellent. The atmosphere was electric. So thank you to my lovely friends Holly and Charlotte at the Zero Waste for making all that possible. Without them, it certainly wouldn't have happened. So thank you. And of course, lots coming. This weekend is the big weekend for all the Christmas events kicking off. So the ice skating rink is opening again up at Calverley Park. There's Christmas at Bedgebury with their fabulous light displays. Hever Castle, we've put some great things. So much going on locally. Do look at all the local What's On pages for lots of things to do to entertain the family. Christmas is not far away now, and I'm certainly feeling the pressure. I hope you have a lovely week, and I look forward to seeing you next week. Bye bye.